It's another trading day. It's time to do business here on Business Incorporated. We have 55 minutes to give you updates from the world of business. And here's what we have prepared for you. In Nigeria, FCCPC begins market sensitization against price fixing and counterfeit goods. Our correspondent in South Africa gives us stories ahead of G20 meeting, especially after President Trump hints he may not attend it. There's progress report in Ethiopia concerning their drive for digital government. Welcome to the program. I'm Amy John McCoy. We start from the global space. As usual, U.S. President Donald Trump's tighter deadline for Russia to end the war in Ukraine and his tariff threats to countries that trade its oil, and that is a major driver of oil this afternoon. So we see the most active Brent crude futures edged down by 17 cents. That's about 0.24%. But it's now at $71.52 a barrel. WTI has also dropped 0.14% and is now at $69.12 a barrel. The Brent crude September contract that expires today went down 11 cents. That's about 0.15% to close at $72.40. Both contracts are settled on Tuesday at their highest since June 20. Trump had said that he would start imposing measures on Russia, such as secondary tariffs of 100% on trading partners, if it did not make progress on ending the war within 10 to 12 days, moving up from the earlier 50-day deadline. The United States has also warned China, which is the largest buyer of Russian oil, that it could face huge tariffs if it kept buying. Treasury Secretary Scott Bessent shared this during a conference in Stockholm. To the metal space, gold prices inch higher on Wednesday, helped by a slight pullback in the dollar as investors await the Federal Reserve's policy decision and comments that could offer some cues on the timing of U.S. Central Bank's next move. So let's look at the numbers. It's a mixed color. That's what we have this afternoon. Spot gold is up 0.2%, $3,331.03 a barrel. U.S. gold is also up 0.1%, $3,328.30 per ounce. Spot silver is on the flip side, 0.4% in the red to $38.04. Platinum is a whole percent down in the red there, $1,381.69. While palladium lost 0.5% to stop at $1,252.40. Today is the second day of the Federal Reserve meeting, and we expect that the decision will be announced because of the time difference. That will be later on today in Nigerian time. And of course, we're going to settle on that tomorrow on our programs. Back here in Nigeria, electricity consumers across the country owe the sum of 70.25 billion naira as at May this year. And this is according to the latest report released by the Nigerian Electricity Regulatory Commission, that's the NERC. Highlights of the findings by the electricity market regulator shows that 12 power distribution companies billed a total of 261.82 billion naira during the month, but collected only 191.57 billion naira. And this represents a collection efficiency of 73.17%, but marks a 4.42 percentage point drop from April this year. The report shows that total energy received by the discos went up by 5.8% to 2,774.49 gigawatt hours, while the total energy billed increased by 3.25% to 2,255.51 gigawatts hours. The Federal Inland Revenue Service says it has discontinued the issuance of tax exemption certificates to all categories of taxpayers, including pioneer status companies, non-governmental organizations, and free zone entities. In a statement signed by its executive chairman, Zach Adediji, the tax agency mentioned that no further tax exemption certificates would be issued, warning that previously granted certificates will remain valid only until their expiry date, after which renewals would no longer be allowed. The FIRS also cautioned that any attempts to forge, alter, or misrepresent exemption status would attract stiff penalties as prescribed by the law. The Federal Competition and Consumer Protection Commission, the FCCPC, is actively conducting market sensitization campaigns across the country to address issues like price fixing, harmful products, and unfair trade practices. These initiatives aim to educate traders and consumers alike, as well as sharing their rights and responsibilities, and promote transparency and fair competition in markets. During a visit across some markets in Lagos, officials of the FCCPC mentioned that the agency is also working with market leaders and associations to ensure compliance with consumer protection laws. Mile 12, a major foodstuff purchasing hub in Lagos, one of the largest in West Africa, with crops delivered from different parts of the country as well as the region. The news of price fixing and sale of counterfeit has motivated the Federal Competition and Consumer Protection Commission, the FCCPC, to hold a market engagement forum across key trading hubs.
In accordance with Section 17, subsection 1 of the FCCPA, while many of you work tirelessly to satisfy consumers, others engage in all forms of market abuses that shortchange consumers. Only last week, FCCPC operatives were at the Lanko market in Mushin area of Lagos, where they uncovered suspected expired rice that was being rebacked and sold as premium brands. This kind of practice is wrong and is illegal. It puts lives at risk and damages the reputation of all traders.
Aside expired goods, the Commission is also investigating coordinated price fixing of everyday commodities like rice, yam, and pepper.
You know, about 12 international markets, controlling price will be extremely difficult for us because this is the biggest perishable market in West Africa. Biggest in terms of size, biggest in terms of the items they bring to the market. But what we'll ensure is we monitor the activity of people that bring tomato. Of course, I know that in some cases, those traders will put tomato, sometimes the one that is not too good down, and they put the good one up. That is not a result as a result of bad market. It's not a result of a shortage of the market. No, we have a abundant market, mature market, but there are some people who are so stingy they want to make money, and this has made us to stand up to make sure that everything we are doing in the market, we must ensure that this system takes place.
Next is Alaba International Market, where the sale of counterfeit appliances, false warranty have been alleged.
We are doing our business here legitimately because most of the products that we are selling here in Alaba is indigenous brand names. We have metamorphosed from buying the product of foreign distributors or foreign companies or foreign owners. This time around, we are selling our branded names.
The FCCPC says it is determined to solve genuine business concerns, promote trader education, and standard of fairness and safety. And it's all geared towards protecting not just the consumer, but also the good name of the Nigerian marketplace. And now let's talk digital marketing or data-driven marketing, which we know is at the core of even in markets like that now. You place order online and then it's being delivered to you at home. Adetomiwa Adekoya is a digital product marketing expert and communication strategist and joins us for this. Hi, Adetomiwa, welcome to the program.
Thank you very much for inviting me. Thank you very much. Nice to meet you.
Same here. So we talk about data-driven marketing, but I think at the root of it is the availability of data in a country like Nigeria. We know in the Western world, the US, the UK, you just go online and you get data for whatever you want. But in our part of the world, it doesn't come that easy. So I guess we should first talk about how to solve that problem, data availability first.
Thank you very much. I think it's a misconception that data is actually not available, especially in a part of the world like Nigeria. I would actually say it's more like an education thing and not really like the inavailability of data. Just like you said, in the US and in the UK, we all have access to the same kind of data that they have. So I think the shortcoming here is access to education, about being able to access data. And so being data driven as a Nigerian or as a marketer in Nigeria is actually being able to always refer to facts and numbers to actually make decisions. And so I would say, although there's this another misconception that you need a large budget to be able to access data, there is data in everywhere and everything that you do. You know, even this TV station, and what I'm saying is actually data that would definitely be useful to someone else. Social media, which is actually a big driver or gives people access to customers and users or target audience. They have in-app analytics on Instagram, on Facebook, on Twitter, on LinkedIn, whatever social media platform you are actually using to actually get to your audience. There is data everywhere. So I would actually say it's a case of the misconception rather than inaccessibility to data.
So I wonder who would do that education. I mean, there's data everywhere, but really, if people cannot access it, then it's as good as not available.
Yeah, actually, you're right. But although what I would actually say is we need to do more data education. Like I've said, I would not say it's an accessibility thing. I think it's more of like an education thing. So let me start with the smallest of for small businesses who would probably claim there's like no access to data for them, or it is actually not affordable. So I believe in starting with where you are. You don't need a large budget, or you don't need large resources to be able to access data. So let's take into consideration a small business owner that actually sells maybe fashion items and has a website that they sell it. You have access to social media. A lot of Nigerians, as I said, even my mom has a social media account. You can open a social media account like Instagram and Facebook and sell your items on there. And you can also refer people to the website to actually go and shop. Now on Instagram and Facebook, on LinkedIn, all of these platforms, they have in-app analytics that's going on the dashboard for each of these platforms and being able to access data. So as a business owner, you might say, oh, you don't know the kind of things that your audience actually interact with, or how you can actually speak to them to be able to buy from you. That is where data comes in. Go into your Instagram, for example, look at the kind of posts that your audience actually engage with. You want to understand, is it like static posts like images? Is it video posts that they actually engage with? What kind of posts are they saving? So that is data for you. That is numbers. You can see how many people saw your post. You can see the impressions. You can see how many people shared your post. That is data. You are accessing data. What the other problem is, what do you do with that data that you're accessing? So there's data everywhere. There's numbers everywhere. But actually, you being data driven is not looking at that numbers. The example I gave about the small business owner, if you're running an ad, for example, on Facebook and Instagram, and you're trying to get people to go on your website to actually purchase a product, you need to be able to use tools like Google Analytics. Google Analytics is a free tool for all businesses. You can be able to track what people actually do on your website when they come into your website. Why are they not buying the goods? Is it the price? You have access to this data. So now that you access the data, what do you do with that data? So I would actually say it is not really an accessibility issue. I believe there is data everywhere. From anywhere you want to start, it is more of an education thing. And we have, thank God for platforms like YouTube that actually gives you more insight into how to make use of data to make data-driven decisions. So I would say a lot of businesses just in Nigeria need to learn more about how they can make use of the resources they currently have. Of course, they are very expensive data platforms as well. But as a small business, you need to start from where you are. That's looking at what you currently have, the data you currently have, and being able to make decisions with it.
Yeah, so I mean, you say it's a matter of education because it seems data is everywhere, as you said. And you did mention Google Analytics. I know you said that your mom, for instance, has a social media. I wonder what she does on it. But I mean, I like that you're giving an example, especially of small businesses. So let's say, for instance, we're talking about fashion designer, um, and perhaps it's not looking so good, and the person wants to switch to data-driven marketing. So what can the person do? Where should the person look, to start at
Okay.
least?
Okay, so I would say start from the beginning. as a marketer, what I always do is I think there's also a lot of people doing things because it is working for someone else. If you want to be data driven, data has to be with you every step of the way, starting from even when you decide that, oh, I want to go into a fashion business. What kind of fashion items do you want to sell? Is there a market for it? There's something we call total addressable market. The location you are, if you're probably somebody living in, let me use somewhere very, very local in Ibadan. Let me think about places like Bere. If you're in Bere in Ibadan and you want to sell luxury items, you have to look at the total addressable market. Are people in that location, are they able to purchase or buy items from you? How easy is it for you to actually send items from Bere, Ibadan to people that will probably be able to afford it in Banana Island? So doing like a research at first to actually even understand if there's a market for what you want to sell. And yes, there are free tools for you to even be able to do research. There's Google Forms. Google Forms is like a free Google tool that allows you to actually ask people questions. So you know who your target audience is, what they look like. You can create like a forms where you actually ask questions about what they can afford and where would they actually be willing to actually order the items from. So that is Google Forms, a free tool that enables you to even do research, get feedback from your target audience, get feedback from your existing users, and be able to make decisions from what feedback you've actually gotten. Now you set up your business and now you've set up a website. There are also free tools to actually be able to create a website. There's Shopify. You can actually create or set up a website and without having like a technical knowledge or calling a web designer to set up a website for you. You can also do that on Canva. So now all of these websites. So let's say you also create like a social media account. You create a Facebook account. You create an Instagram account with the plan that you're actually going to create content on those platforms. So now be able to send people to that website to actually be able to shop what you're selling. Now, on the website, you want to understand where your traffic is coming from. That is where Google Analytics comes in. If you're data driven, you will be able to look at where people are actually coming in to actually shop or buy things from your website. You'll be able to determine if people came in from Facebook, if they came in from Instagram, or let's say you went to an offline event and you shared flyers and you told people to scan a QR code there, you'll be able to know exactly where the source of your traffic is. Now, when you know, being able to take data-driven decision is to know that, oh, most people that actually shop from me, they come from my TikTok account, or no, they come from my Facebook account. Then you actually know that that particular channel is a very good channel for you to continue to run ads. Or maybe, oh, I tried LinkedIn and people are actually not coming from LinkedIn. LinkedIn is not a good source for my marketing. So you actually need to reduce the amount you're actually spending on that platform to run ads. So what I'm saying, all this thing I've said, there's nothing where I've actually said, oh, you need to pay money to be able to do this. It is more of like a skill gap you need to fill as a marketer. You need to know what is working for you and what is not working for me. Exactly, again, with also like the most important aspect also like being smart with the goals you're setting for yourself. When you start a business, during your business, you have to make sure your goals are actually specific, they are measurable, they are achievable, they are realistic goals. You cannot be a small business owner. You're trying to become like Amazon in 10 months. It's not possible. You need to work with your resources and see how you can actually utilize that resources to actually achieve your goal. So I believe you can start anywhere. There are enough free tools. And I think AI as well as the internet has made it quite easy for anybody. So if you're saying, oh, I want to set up a website, just go on Google, search free website tools, check it. Google Analytics. Oh, I don't know how to use Google Analytics. Go on YouTube, how to actually use Google Analytics for my business. There is everything and anything you want on all of those platforms that would actually empower you to be able to be a data-driven business owner and be able to achieve the target goals for your business.
Yeah, very interesting, Aditomewa. And it does sound easy for people of certain level of exposure. But I mean, when you think of our reality in Nigeria, um, the level of exposure also matters. Perhaps some people would need to employ the expertise of other younger people, you think?
Yeah, that's true. So because I use my mom as an example, so I'm going to go back to my mom again. So my mom has a shop where she sells a lot of retail items, household items that you might need for like your daily use. And recently, what I noticed that because I know she spends quite a number of time when she's bored, she spends time on Facebook, she spends time on TikTok, and very recently, I noticed that she opened a WhatsApp business account. And this is because she noticed that a lot of customers actually call her to ask for goods and ask her to deliver. So she opened a WhatsApp business account. So now I didn't have to tell her this because I remember I recalled after. So why did you open a WhatsApp business account? And she was like, oh, I don't want them to keep disturbing me on my personal line. They can just like, I can create a catalog there and they can just be able to add items they want delivered to them. And it is just easy. And this, my mom is not, I will not say she's like very, very tech savvy. This is someone that is close to her 60s and she's been able to use the resources that she has. I know it will actually get very expensive if you want to employ like a Gen Z or a millennial that could help you sort this out. That is the easy way out. If you can afford it, you can definitely go out to do that. But anything that makes you able to access Facebook, go on Facebook, like a picture, share a post. Because my dad also always sends everything from Facebook to me. Anything that gives you that little technical knowledge to be able to do that, share something from one platform to the other, go on TikTok, watch images. There is nothing you cannot learn. And I believe we should just remove that restriction of thinking, oh, this thing is too techy. Because when people actually hear tech, they think it has to do with coding or doing something that they can actually not do. And that is not the case. There are a lot of simple things. So I think a lot of people should actually become more open-minded to learning. If I want to teach my mom now that, oh, I want to create a website for you, that will actually be quite easier for your business. Maybe I would have to upset the website for her. But one thing I will have to do is when she's getting email alerts for somebody that has actually placed an order, she knows what she needs to do. Else. I feel like even if you want to get support from people that are younger or they know this thing, it should be little support, not something that will cost you so much. There are a lot of other things that you can do, and you should just be more open-minded to being able to fill the skill gap that you may have.
I did tell me what about this time yesterday. I was having a conversation that was on the inverse part of this. We're talking about staying safe online. So, and my guest yesterday was saying how you should minimize your post and exposure online. Now, it seems like you are on the other side. How do we find a balance, staying safe and still being able to, sell as much as you want or tell people about what you have as much as you can?
Thank you very much for that question. There is definitely a need to stay safe online, especially with AI. I think AI is a good thing. I also think it has its own sides. It has. I definitely would always be someone that's always pushing for getting done because the world is always moving, and especially as someone in marketing, you need to also be able to find the good aspect of trends and how we can help things better. So now staying safe online, I don't think there's any problem with being online. There's no problem with having a social media account. There's no problem with dropping comments, engaging people. Now the part where you need to be careful is data protection, especially even as a business. I mean, there are a lot of people, even in Nigeria, asking questions about, oh, why do I need to drop my phone number for this? Why am I seeing this particular ad? People ask these platforms that we're using for ads. So actually ask them, why I don't want to see this content again. There are a lot of things that that is where regulation comes in. There are a lot of things that needs to be regulated, if not by the government, even by you. There are people that they are on social media for different things. For somebody like my mom, she's on TikTok for entertainment or to drop comments on my pictures. There are other people that are on TikTok that is their source of living and they're looking for people to scam. People have different goals, and identifying that will definitely be helpful. For example, if someone is sending you a link, there are links everywhere to click something to go somewhere. You don't know this person. You don't know what the link is about. There is no need to actually like click on that link. And when you hear things that are too good to be true, just don't even bother. Scams, the way it works is when there's a sense of urgency introduced or when things become too good to be true, you need to actually stay away from those things. When you're online, you already know your community, you know people you can trust. Even people you can trust, sometimes you've seen cases of people actually hacking accounts and telling people to click links or send them money. You need to always be careful. Even in our daily lives, you're careful. Just the same level of care you put into interaction in your daily life is the same level of interaction you need to put on social media or when you're online. Someone you don't know should not actually tell you, oh, click this link for me or do this thing for me. You need to always ask yourself questions when you actually come across these kind of things. You want to ask, is there a sense of urgency? Because these are things that help, especially when it comes to scams or like links that you should not be clicking. If there's a sense of urgency added, you need to ask yourself twice that, do I really need to do this thing? If it's somebody that you don't know, if it's somebody that you don't trust, and even if it's somebody that you know, you need to probably reach out to them to actually ask, did they send you a link? So I believe just the same level of care that we actually give ourselves in real life is the same level of care you should also put into interacting with posts, interacting with things that you actually see online.
All right, Adetomiwa, thank you for being very practical there. I really appreciate that. Adetomiwa Adekoya is a digital product marketing expert. Thank you for your time.
Thank you very much.
All right, now let's take a break. When we come back, we'll head to the markets with Anita Edet. Please stay with us. Welcome back. It's still Business Incorporated here on Channels Television. Let's head to the markets now with Anita Edet. Anita, I learned we have another high at the NGX.
Another high and another high. Because normally we take this intraday market numbers 1 hour, but then what I have here, guess what? It is 1,000. If you could, before I give out that number, let's quickly take a look at what the last number was. It was 1,138,729.14, but what I have here currently is 138,915.89, so almost just a tad away from the 139,000 points, which I'm sure you're going to be giving us that number.
Yeah, and I know we closed the market at 137,900 yesterday. So
exactly.
I guess should we get used to this new high every day? And I hope we don't get disappointed one day.
As a matter of fact, yesterday when we had much of analysis on the equities market, that analyst said, yes, you should expect it, but then at some point the market would respond to the impact of profit-taking. But for the moment, it's rallying on the back of latest quarterly earnings and the HY1.
I don't know why I find that difficult to connect, because even before the earnings season, Anita, we were on highs.
Yeah.
You know?
It's
even before the earnings. So,
yeah.
I mean, I guess it's just the time for the market. Sentiment around the market is positive at this time, whether it's connected to reforms or not. That's another argument, you know, but I mean, it's just what we have now.
So it's actually a combination of factors, but well, we'll be talking more about the fixed income as well as the equities market.
Yeah, because I learned the DMO, they've released what they earned from the last auction, and even the federal government savings bonds.
It was an oversubscription, so we'll be talking more about that. As usual. Nigeria's market is very, very profitable. All right, so this is not the number to follow. This is actually the number to follow. 138,915.89. The market was up by 0.73%. In basis point, that amounts to about 1,003.02 points for the index, and still climbing. And we also have earnings reports still coming in. Presco has just released its earnings report. And so many other companies are releasing their second quarter and first half of the year reports. So far, the market, month to date, we have just about one trading day left for the month of July, which is tomorrow, and the 1st of first of August would be starting on Friday. That will kind of strange to start the first trading day on the last trading week. But so far, month to date, 15%, and year to date, 33%, just almost about 34%. Wow, that's an impressive move for Nigerian stock market. And so far, about 10 trillion naira has been gained within 19 consecutive days of bullish trend. So that's it for Nigerian stock markets. For the Johannesburg Stock Exchange All-Share Index, it's also within the range of 99,000. At some point, it had gotten to 100,000. But that market is still trying to play catch-up with Nigeria's stock market, as you can see on the board there, but still by a very wider margin behind. Okay, let's take a look at the markets on the other sides of the African continent. EGX 30, 0.49%, 34,276.79. Nairobi Stock Exchange All-Share Index, more than 1%, almost 2% for the close of Tuesday's trading session. And of course, it's still climbing higher. Almost all the markets are still, like we said, it's becoming more cliche that the markets are doing pretty well, and more like in a competition to be which of them would be the world's best performing stock markets around the world, across Europe, across the United States, across the Middle East, and for the African continent. But of course, we're also doing that countdown as the year progresses, which tomorrow will be the last trading day for markets around the world for the month of July. So we're done with doing that analysis, but let's do this time the questions. As regards, first, we're looking at the fixed income market. What we had for the Treasury bills market, we saw that yesterday it was a bullish kind of a mixture there, both across the Treasury bills market, the OMO market, and the FGM bond market. Well, so we'll be talking to the Director of Research and Strategy with Chapel Hill Denham, Mr. Tajuddin Ibrahim. So he'll be giving us details about that OMO auction, which the CBN was able to raise about a 1.5 trillion naira from the OMO auction, and then it's targeted about 100 billion, 100 billion naira for the FGN bond auction. That's for the July bond auction, and which also came oversubscribed. So now let's bring in Tajuddin Ibrahim to give us details about this. Thank you for joining us, Mr. Tajuddin.
Thank you for having me on the show today.
Okay. So now, give us your expression about your reaction to the latest the results coming in from one side, the FGN bond auction from the DMO, and on the other side, the OMO auction result from the central bank. So, what do you make of these two results, and how are investors reacting to it?
So, thank you so much for having me on the show. To start with, when we take a look at the the bond auction that was held, one of the key takeaways around it is that the bond auction, showed that the government was not aggressive in terms of issuance, because in the calendar or the notice of bond issuance was showing just about 80 billion naira in terms of the planned issuance, but eventually they issued or sold about 180 billion naira in total. And what that implies is that the federal government is not that aggressive when we look at bond issuance. On the back of the fact that they are not aggressive, we began to see yield come down, particularly, specifically speaking, at the end of July, at least as of yesterday, average yield on the federal government bond curve came down to 16.3% from 18.5% at the end of the month of June. So what that implies is that when we have the government being less aggressive in terms of bond issuance, what naturally we will see is that the yield in the market will be coming down accordingly. And when we talk about OMO issuance, the OMO issuance and sale of 1.5 trillion yesterday is an indication of the liquidity mop up by the CBN, because liquidity really built up in the market, largely because we had FAC inflow into the market around 850 billion naira. We also had primary market bill repayments that flew into the financial system. So there was a need for the CBN to mop up excess liquidity via OMO bill issuance. That really is what played out. And we also had slightly lower yield compared to where we started this year.
Okay, so now, Mr. Taju, there's been this inverse movement in between the equities market and the fixed income market. But as regards the FGN bond or the bonds market, what are the emerging trends for investors' appetite, if there's any? Are there any emerging trends for investors' appetite within the fixed income markets?
So within the fixed income market, we still have investors still being speaking interested in the market, particularly those that are fund managers and also those that have the liquidity to play in the market. So what we only are experiencing is a situation where yields are falling in the market. And I think it is a reflection of the overall health of the economy, particularly when we take a look at inflation. When inflation is falling in such an environment, you will find that yield on fixed income instruments will be falling. That is what we currently are seeing, and I think investors are encouraged, to go big on bonds at the current levels of around 15 and a half percent in terms of yield, considering that we are still going to have a situation where bond yields are going to fall further in the coming months, largely because of the relatively favorable outlook when we talk about inflation. So I believe bond investors, investors should still be taking position in the market. When they take position now, on a mark-to-market basis, when yield continues to fall over the next couple of months, what most likely you will see is that such investors that take position now will be making money, because the prices of such bonds would have reason. And I think we have a situation as we speak where we have the equities market is going up and the bond market, is also going up. That is a very good development in any capital market around the world.
Question which you just mentioned the equities markets. Now the equities market, I'm sure if you have a tracking there, you can see if probably has crossed the 139,000 index level. So when you take a look at that, let's marry that with the latest earnings results, I know, which is one of the contributors to this stellar performance that we've never seen about almost a 20-day consecutive gains on the market. So now, what are the reactions, or what are the latest earnings? How are they affecting the market?
The latest earnings published by companies listed on the NGX, those earnings are robust, particularly because they show significant recoveries by some of the companies that are listed. Let me talk very briefly around them. Number one, we have Nestle that delivered, a remarkable set of results for H1, with revenue growing at over 42%. And also with the profit after tax being positive, compared to the loss that they had at the corresponding period of last year. Presco is another one. Presco's revenue grew at a much faster pace of over 100%, and the profitability is also very solid, with EBITDA margin improving to over 66% from just around 64%, the previous year. That is on the one hand in terms of how they have performed, and just to mention those two. Let's look at what they have also done. 11 companies, as we speak, have announced interim dividends on the back of this robust result that they have published so far in the first half of this year. And what that implies is that you are going to see more investors take interest in the market to take advantage of the interim dividends that these companies are announcing. So I think those two factors, number one, stronger performance, number two, interim dividends, are the two drivers of the performance that we are seeing in the market currently. And I reckon that by the time the banks also begin to report and announce interim dividends, the performance of the market could be a lot stronger than the current level that we currently have in the market.
Well, thank you so much for your analysis, Mr. Tajuddin Ibrahim, Director Research and Strategy with Chapel Hill Denham. We hope to have you next time on the show.
Thank you so much.
So, I think I'll call it a wrap, but let me just put the wrap. The Asian markets in the mix, U.S. markets also in the mix, while Middle Eastern markets, pretty not too good picture. All eyes on the U.S. Fed.
Yeah, the decision in a couple of hours. Thank you so much, Anita.
Pleasure.
And still talking about markets, we have Chip Onda now to tell us what's happening in Europe. Hi, Chip. Good afternoon. Welcome to the program. What's happening in the market there?
Good afternoon, Eni. European shares are just about flat today, and the pan-European stock 600 is up just about 0.1%. Germany's DAX is also around the same level, and the FTSE is down 0.3%. Now, investors are cautious after 2 days of trade talks between the United States and China. Those obviously ended without any major breakthrough. Now, American and Chinese officials agreed to extend their 90-day truce on Tuesday, and both sides also described the negotiations in Stockholm as constructive. Investors are, of course, also awaiting several central bank decisions, economic reports, and corporate earnings over the coming days. And of course, the big one is U.S. President Trump's August 1st deadline for the tariffs. And of course, also here in Europe, the Eurozone economy has released, the European Commission, Eurostat's division, so that statistics division of the European Commission has released the latest economic data, which shows that the Eurozone economy only grew very slightly. It just edged out a bit of growth in the second quarter. It grew 0.1%, and that was mostly because of better than expected GDP figures from France and Spain. And of course, unfortunately, Germany's economy, on the other hand, disappointed slightly as well. It shrank 0.1%.
I guess that shouldn't come as a surprise. All the beating coming from the tariffs, will certainly show somewhere. But there's also another story from the European Commission accused a Chinese online shopping platform, Temu, of breaking its digital rules. What rules did they break?
Well, Ini, the European Union says that Temu isn't doing enough to stop illegal products from being sold on its platform. And that is also all about the EU's Digital Services Act, which requires platforms to manage the risks of illicit goods being distributed. And the European Commission conducted a mystery shopping exercise, and that showed that consumers are very likely to find what Brussels called non-compliant products on Temu, and that included baby toys and small electronics which would be unsafe for consumers. Now, these are just the preliminary findings of an investigation that Brussels launched into Temu last year. It is also looking into whether the platform's mitigation measures are effective, how the platform uses design features that could be addictive for online shoppers, and then also the transparency of its recommendation systems and its access to data for researchers. So there's maybe more to come from the European Commission on Temu.
Yeah, and I know that eventually this is going to affect the other players in the e-commerce industry.
Ini, it is an industry-wide problem. The European Union has also been investigating the Chinese fast fashion e-commerce platform Shein. Now, both Temu and Shein take advantage of a trade loophole that is called the de minimis rule, and that is a rule that allows for products to that are worth than 150 euros to be shipped into the EU without duties, so duty-free, and also with minimal checks. Now, last year, 12 million packages arrive from outside the European Union every day. And the Chinese platforms have been offering the cheapest products by cutting out the middleman and connecting European buyers directly to manufacturers in China. And of course, Temu has also been one of the most downloaded apps in Europe since last year. It has 94 million monthly users here in the EU. And this is, of course, why we see the European Commission looking into the platform. It is the sheer volume of trade that is being carried out on the app. But of course, the problem is wider, and it also includes e-commerce giant Amazon. So this is not just about the safety of the products, it's also about the safety for buyers, like whether platforms are using addictive methods which bring back users over and over. So what happens to Temu also matters for the whole industry. The EU could also fine Temu as much as 6% of its global annual turnover if it doesn't comply with EU rules. And that would also, of course, be a warning for the rest of the e-commerce sector.
Yeah, sure will. Thank you so much, Chip, for that.
Thank you, Ini.
And now let's come back to Africa, where South Africa's Minister of Mineral and Petroleum Resources says that Africa should prioritize processing its own minerals rather than exporting raw materials to countries that impose heavy tariffs. The minister was speaking at the G20 Critical Minerals Stakeholder Engagement that was held currently in Sandton, Johannesburg, under the theme Harnessing Critical Minerals for Inclusive Growth and Sustainable Development. Our correspondent, Innocent Semosa, has the details.
The conversation here is centered around critical minerals, partnerships, and technical cooperation. The meeting brought together stakeholders from government, industry, labor, and the general public to engage in meaningful dialogue on the G20 Critical Minerals Framework.
Well, the critical energy sector is facing a handful of challenges, including the issues around beneficiation and illegal mining in South Africa. But of course, as leaders meet here today, they are saying that Africa must be at the center of processing its own minerals to better the continent. And they're saying that the continent has the means to basically do that.
Minister of Mineral and Petroleum Resources in South Africa, Gwede Mantashe, says African governments must retain more value for their mineral wealth.
We want a discussion with China. They can build a bigger chrome industry than us when we mine chrome. The bigger chrome industry must be here because we're the biggest chrome miner in the world.
In partnership with the Council for Geoscience, MINTEC and the CSIR, with the UNDP, UNCTAD and Southern Transitions as knowledge partners, developed the zero draft of the G20 Critical Minerals Framework. The document has subsequently been discussed and negotiated in Task Force 1, as you've heard.
Meanwhile, lengthy permitting processes, bureaucratic red tape, and unclear governance structures have been known to delay projects and discourage investor confidence. However, Deputy Minister of the Department, Samantha Graham Murray, says there's now improved coordination and collaboration between government and the private sector.
Absolutely. You know, our G20 agenda has been very much an African agenda as the presidency. From the Department of Electricity and Energy side, Africa is our third outcome in terms of the Energy Transitions Working Group. So we have made sure that we are bringing Africa along as part of the conversation, and we're not just talking as South Africa. We have the AU Commissioner for Energy and Infrastructure is a South African, so we feel that that does give us some leverage in terms of getting that African conversation happening.
Yeah, clean coal. You know, if you go to Leandra, you'll find a facility there that we're developing of carbon capture, storage and use. You'll find it there. Because we think that if we successfully implement that project, we'll clean our coal. Then we can duplicate that experiment.
As the global demand for critical minerals grows, Africa is being called to take charge of its mineral wealth. From Johannesburg, South Africa, Innocent Samosa, Channels Television News.
Now, more than 90,000 Zimbabwean nationals have submitted applications for various visa categories, permits and waivers to South Africa's Department of Home Affairs as the clock ticks down to that final phase of Zimbabwean Exemption Permit Program. According to official data, approximately 5,000 applications have been received for the new Zimbabwean Exemption Permit, while around 20,000 applications have been filed under other visa or permit categories. Notably, 71,000 applications of all types have already been finalized, reflecting significant activity ahead of the November deadline. However, the DHA estimates that at least 80,000 ZEP-eligible Zimbabweans have not yet applied for alternative permits, raising concerns of a potential backlog and legal uncertainty for many when the final grace period ends. To ease the transition into South Africa's mainstream immigration system, 62,000 waivers have been approved so far, but only 19,000 of those have been downloaded via the VFS Global Management System. From Zimbabwe to Kenya, in the last fiscal year, which concluded in June 2025, the Kenya Revenue Authority recovered 86.52 billion Kenyan shilling through the settlement of tax disputes with individuals and businesses. According to Commissioner for Legal Services, Paul Matuku, the amount of revenue collected from litigation and alternative dispute resolution procedures is 43.08% more than the 60.47 billion that was collected in 2023-2024. The taxman attributes the increase mostly to the rising acceptance of out-of-court settlements with taxpayers. And a digital transformation in Ethiopia seems to be on a steady progress as the government has announced that more than 900 public services can now be accessed digitally. This milestone is one of the fruits of the Digital Ethiopia 2025 strategy implementation, and the outlet quotes a senior official in the Ministry of Innovation and Technology as stating recently that Ethiopia's digital transformation progress is reflected in the building of the three core components of digital public infrastructure. The executive mentions advancements recorded in implementation of the FADA digital ID, a digital payment system, and data interoperable infrastructure, all aimed at facilitating the delivery of services in multiple sectors. And we're still in Ethiopia, where the country has signed a memorandum of understanding with Italy, and it's aimed at enhancing agricultural productivity, particularly looking at the coffee chain, a coffee value chain, through technology transfer, farmer training, and institutional capacity building. At the same time, the country reaffirms its strategic partnership with the United Arab Emirates to deepen cooperation in agriculture, trade, and investment. The agreement was signed by Ethiopia's Minister of Agriculture, Girma Amante, and Italy's Minister of Agriculture and Food Sovereignty, Francesco Lobringinda, on the sidelines of Second United Nations Food Systems Summit. Now let's head to the crypto space now with Ladi Williams.
Yeah, so it's red on the street this Wednesday. That's midweek trade, and it seems to be on the back of what's playing out there with the U.S. Fed. Maybe they're going to cut rates or not. Maybe investors are just trying to take position, at this time before they get that decision.
I mean, yesterday at this time we had 118,000.
Yeah,
now
so it's a pullback. Who knows what's going to happen next, at this point? But we're waiting on the U.S. Fed. Is that cut going to happen? We'll definitely find out. So it's mostly red on the screen. I'm there with XRP, BNB, Ethereum. I'm taking a hit this afternoon. Let's see some of the headlines now. See, according to blockchain data shared by Sentiment, that's yesterday. We see Bitcoin has fallen by 1.61%, but we're seeing wallets holding at least 1,000 Bitcoin. That has dropped, dramatically in the past 2 weeks so far. Then we see a 47-year-old crypto CEO has been sentenced to 7 years. 7 years. That's for in prison for some of the bad action that we've seen in that market. We know the crypto space is known for harboring some bad actors, and now we're seeing this one now is going to be made a scapegoat at this point. AML Bitcoin founder there is getting 7 years in prison for a $10 million fraud scheme that misled victims using a fake cryptocurrency called AML Bitcoin. So he's getting 7 years for that. And we see Ethereum is celebrating the 10th anniversary of its mainnet launch. That's the first block that was generated July 30th, 2015. So it's an anniversary right there. To celebrate the event, the Ethereum Foundation team will issue commemorative NFTs and non-fungible tokens that can be claimed until July 31st. And talking about Ethereum, now we're getting some forecasts, at this point. Some are expecting Ethereum to hit maybe $7,000 in the fourth quarter of, that's fourth quarter of 2025. But let's see how possible that is. Joining us now is Chimezie Chuta. He's a founder, Blockchain Nigeria user group. Hello, Chimezie. Great to have you.
Hi, Ladi. Good day.
Good day.
Always a pleasure to join you.
Yeah, always great to have you, Chimezie. So, as usual, we have some of the experts there claiming to see the future, and we're getting one here, talking about a $7,000 target for Ethereum in the fourth quarter of 2025. Yeah, sometimes, in the crypto market, sometimes these things happen, sometimes they don't. What are you seeing?
Well, the current market rally, especially around Ethereum, is basically driven by three major factors. There are strong fundamentals, there are strong technological advancements, and of course the market forces itself, the market dynamism that determines the buy and sell order. So we see it highly undervalued if you want to be realistic in assessing what the market looks like. Because annually, Ethereum injects about $20 billion into the market through its assets. And currently, with the current inflow of Ethereum annually, it doesn't meet up the demand for it, because we have this ETF thing that is pulling an average of $1 billion into the market every week. And if that thing is sustained, obviously, it's clear that Ethereum will hit that 7,000 or even above before the end of 2025. So I'm also very bullish on the price of Ethereum, because technologically it's doing very well. The total value of the market, the total value locked in Bitcoin, in Ethereum protocol, is over $70 billion. And the technology itself is being built for DeFi and real-world assets. So there's nothing stopping Ethereum from hitting $7,000 as predicted.
Right, and looking at some of these blockchains, from Solana, Bitcoin, Ethereum, most of the time we see Ethereum sometimes, when there's high usage or volume or activity, it gets slow. Most of the time, that's talking about Ethereum blockchain, and the fees get really expensive. Do you think the blockchain has matured so far?
Yes, the recent Ethereum upgrade, dealt with that issue very, very well. And Right now, Ethereum transactions are very fast and very cheap. And yes, the challenge is being posed by Solana and Sui and some other blockchains are there. But again, you look at the fact that Ethereum is established. It has a robust developer resource that is made available for people who want to build on Ethereum more than any other blockchain. And these are the things that determine how well people use a particular blockchain when the developer resources are rich enough to accommodate the needs of developers that are coming into the ecosystem. I mean, if you are looking for how to build a smart contract that you want to use in integrating one or two things into your application, then you can be very sure that going for an Ethereum-based protocol is your best bet instead of going to, you can spend all your week and all your months looking for those resources for other networks. So that's a very strong factor to consider that will definitely keep driving Ethereum prices. But again, we also know that it's a technology that is constantly advancing. And when you have this first mover advantage, it gives the opportunity to iterate and also innovate at the same time, maintaining your lead in the ecosystem itself. So I don't think the founders and the developer ecosystem around Ethereum is sleeping, and they're not going to allow any other protocol to take the first place where they're already leading extensively.
All right, Chimezie Chuta, founder, Blockchain Nigeria User Group. Thank you so much for coming on today.
Thank you, Ladi. Always a pleasure.
All right, so there you have it, different forecasts at this point. Everybody trying to get a crystal ball to figure out what's going to happen in the future, but who wins? We'll definitely find out soon.
Time will tell.
Time will tell.
Thank you, Laddie. All right, so that's it on the program. Thank you so much for being a part of Business Incorporated. Again, it's midweek, so we have 2 episodes more to go. And we do have an announcement that will be done tomorrow. You don't want to miss Business Incorporated. There's something we need to tell you. But I'll see you tonight on the Stock Market Report. I'm John Mekwa.